Angie, how does it feel to be in a prolonged downtrend in grains? Are you enjoying it?
Not at all. No.
Yeah, I
I
didn't
mean, it's
think.
been one of these things that you have, or I have expected to kind of show up, but I definitely did not anticipate this type
Wow.
of move and this type of really, I mean, this is the largest downturn in price that you've seen in corn here, since the 1st of December till now, or at least into the middle of February. One of the largest drops in price we've seen for that time period. Like traditionally for a farmer, they get an opportunity to catch a bit of a rally post harvest, and we absolutely have not seen that this go around, and it is not enjoyable in the risk management sector in farm country right now.
Yeah, because did people lift hedges because they thought things were cheap and there'd be that pop
I'm
post-harvest?
Yeah, you had some folks, that may have looked to do that, but for the most part with farmers, it's not so much that they have hedges in place that they may have lifted. It's just simply they didn't necessarily make the sales throughout the growing season that they wish they would have. Obviously
Yeah,
using hindsight, it's easy to see that you should have priced wheat at $7.50 and
yeah.
soybeans at 14 and corn at 6 plus and obviously I mean you could look at that from a historical standpoint and say well that seemed like an obvious trade to make as a farmer or something like that. But unfortunately, when you have Mother Nature and all of the other aspects in the middle of it, and we were looking at, one of the driest stretches of weather when you saw the market rally like it did here, looking at the chart,
Yeah.
it ends up just being kind of an ugly scenario for a lot of folks out there. And so yeah, we're just waiting to see what happens next.
So Grand El Nino was kind of Grande El Nino was kind of a flop for the grain markets, right? And
Well, we
now
saw,
aren't we
yeah, I mean,
shifting to La Nina now?
there's talk that we'll see that. El Nino tends to bring about a drier start to the Brazilian growing season, like we saw.
Yeah,
So you saw the soybean market rally into, through November into parts of December there and stay relatively supported as we worked our way. Maybe it was early November. Time just flies so much when you're having fun. But soybeans traded higher on the idea that we were going to see a production reduction in Brazil, and we have. I mean, I almost want to say thank goodness for that, even though you always hate to see any sort of drop in production anywhere. We did see the Brazilian crop come off, nearly 400 million bushels from where we had started because of El Nino and because of the drier start to their growing season across the majority of their northern growing areas and parts of Mato Grosso. But one thing that we have seen is a correction in Argentina's production outlook simply because El Nino tends to benefit Argentina's weather. Now they've had a stretch of dry weather and heat that's probably taken, the top end off from their production estimates, but the switch over to El Nino, has resulted in a reduced Brazilian crop, but we did see a larger Argentina crop, and now we're waiting to see what it means for us here in the northern hemisphere. Obviously, we've had far more rainfall across the southern plains where you've experienced or had multiple years of drought that had limited wheat production. But now the talk is that we could see above normal precipitation as we work into spring planting. And so with the prices as low as what they are, if we do run into a planting season where it's a bit of a struggle to get the crop in the ground and prices remain as depressed as what they are, you could see some sort of reduction in overall planted acreage, as a result. But we're waiting to see what it means. And then, of course, La Nina tends to result in a drier Western Corn Belt weather pattern. And so that could
yeah.
have a huge influence on US production, but that won't be something we see until we get into the middle or late summer months.
Okay, so I'm noted wheat has still the best, at least somewhat hopeful structure, but I look at it here and we retrace the whole war move.
Yeah.
And then I look at beans and we haven't. And, just technically, this was a pretty important breakdown this level, about call it
Mhm.
13-ish with
Yeah.
a high of 17. Actually, it projects under $10 beans at
Hmm.
eventually, which would be just like wheat already did, maybe wheat led to the downside, and it's bottoming first. Same thing with corn.
Mhm.
Gosh, I mean, I haven't seen an RSI like this in on a weekly chart in a long time.
You and me
Uh,
both. I mean, I've been optimistic that corn would catch some type of bid, since about $4.30 on the front month, and we just continue to fail. And the hard part is there really isn't much in the way of solid support underneath this market, like you're showing here, because we really haven't seen it. Like this used to be the high end of the range pre-COVID. If you look back through
yeah.
2014, through 2019, for December corn, we tend to see a 380 to 475 type range. And the 475 was in 19 when we saw the largest delay in planting that we had seen in quite some time. And so yeah, I mean, we're at a place here, and I had said that in the past that wheat worried me, that it was the canary in the coal mine for soybeans and corn, just simply because it had managed to retrace the bulk of its war move. And it still has a bullish fundamental story to a certain extent, around the world. We have plentiful wheat supplies, but if we were to see anything that would restrict flows out of Russia or limit any type of production gains in the northern hemisphere here as we work our way to June and beyond, hold on to your hats, because we can kind of see in the past where wheat has been quick to turn around and punish people.
Let me ask you this: Are why aren't food prices reflecting the decline in grain prices?
Well, I mean, there's a whole host of things, none of which are something that you make warm. And you have to factor in increase in labor and some of the additional costs that we've seen incurred just by doing business. Everything is more expensive here, obviously than what it was, even if they say inflation is lower.
Yeah.
And so you have a lot of that. I think there's going to be an opportunity or this sort of effort to make up for lost margins or where margins got pinched in 21 into 22. There were a lot of food producers that got absolutely caught flat-footed after the invasion and with the
Yeah.
inversions and things like that. And so they're going to use this opportunity to buy low and sell higher before they feel a pinch from someone. But I think really when it all comes down to it, we all know that most of our food producers out there are beholden to folks that own the stock, or beholden to a certain level of performance. And so that's where your chase for higher margins comes, and why no one's going to be in a big hurry to roll back costs at the storefront, at least at this point, even if some of your contributing factors are much lower.
Has China backed off because of their economic problems or debt problems? Have they backed off from buying U.S. grain?
Yeah, well, they've backed off from buying US grain far before we saw, any sort of real signs of trouble. And I say that kind of tongue in cheek, because I feel like the signs of China trouble, have been coming even, prior to the post-COVID reopening. We did see a massive increase. I mean, imports in 2023 were the second largest on record for them, I think behind 2022. It might have been 2021. Either way, they were the second largest on record. The problem is that Brazil has caught the lion's share of the business. So Brazil accounted for 70% of China's soybean imports last year, and accounted for well over half of their corn. They had just put in an agreement that allowed for Brazilian corn imports, and they basically took about 17 million metric tons, or just under 800 million bushels worth of corn from Brazil that would have been U.S. business. And
Okay, well
so
there you go. So it's
that's
political. It's a
that's
it's a brick it's a brick deal.
yeah,
Okay.
it's interesting to me, because you'll see folks that'll say that the bricks, don't necessarily matter, and maybe this isn't maybe this isn't 100% brick related, but Brazilian production has grown leaps and bounds. I mean, it's simple to look back at where they've been and what you've seen take place with production growth, and then you look at the infrastructure projects that China's helped fund out of Brazil. You've seen
Yeah.
Brazilian export capacity increased by like 3 billion bushels in a year over the last decade. And so yeah, Brazil has stepped up, and the change in the market structure is very obvious in the sense that we've went from the US being the world's breadbasket as recently as, when I started 19 years ago into the renewable fuels sort of time period, to now, the US is a part of a global market that we have to kind of be paying attention to. And that's one of the reasons that the futures prices here have stayed so depressed, is simply because the world market feels awash in cheaper supplies, and our ability to compete in the export space has been reduced.
Okay, especially since the dollar's been somewhat
Yes,
firm. So the
stronger.
dollar's playing a role, but just like de-dollarization from China, we're getting de-grainification
Right,
from
from China.
China.
And
So,
I mean,
trade with your friends,
yeah,
not your
and
adversaries.
we've seen, the trade flows kind of change post-trade war time
Those
frame,
have
and
been,
then
yeah.
obviously the risk is back on that we could see a second round of trade tensions there. And so yeah, the US is going to lose a large amount of market share, until we have some sort of South American production issue or something like that happens, and then we're friends again.
And I suppose the hog and cattle market, they had a pullback, but they've been on the march to the upside again.
Yeah, they've been working their way back higher. There's been, just a lot of conversation about us not being able to really keep the cattle pipeline full. We've seen really tight margins. We're spending you've seen feeder cattle go up in price, quite
Yeah.
extensively, that are making it difficult to convert that into solid margin per head when go to take them to the fat side of things. But from an overall standpoint, protein is valuable. Meat is valuable, and we'll see, kind of a yo-yo trade there, but should see some solid support just simply because we're so uncertain about what the overall supply picture looks like as we move ahead.
Okay, Angie. So eventually, supply will take care of itself. And
Mhm.
do you think, can you see farmers being so, mm, I don't know, disillusioned that they may not want to put in crops or reduce crop size, or do you
Yeah, I
see any,
mean,
or is it knocking people out of business? Are they losing their farms over something like this?
we're not quite there yet, but it's definitely something that will probably start to happen sooner rather than later. We've got
What a
some
tragedy.
issues with the lending side. We're obviously seeing rate increases, and I
Oh,
think you're
yeah.
going to see some further tightening of lending allowances and things of that nature because of the commercial real estate issue that we are probably looking at, especially because a lot of farmers, work with local and regional banks and things like that. And so it's a real concern of mine. The last downturn that we had seen like this, as we worked our way from 14 into 15, it got really messy really quickly, and was really uncomfortable. And so I'm not looking forward to that at all, because I've been here, done that, and they don't even give you t-shirts in those types of circumstances. But it is going to be tight. I think we will see farmers start to make some decisions about things. I'm seeing it here. Like, I have some growers that are looking at converting some acres that may have been corn or soybeans over to dry beans. We've seen some increases in dry bean marketing opportunities, or maybe they're looking more into specialty crops in the fringe acres. There are some growers that I work with or talk to out of the Dakotas that are going to plant forage crops this year to graze cattle on, versus
Mm.
planting corn or soybeans or something like that. And so yeah, high prices cure high prices, and low prices will work to cure low prices. And we have a long way to go. I mean, we have three corn crops to get in the bin. We've got planting and everything else to get through in the US, when it comes to soybeans. And so I've been doing this long enough to know that everything that we're talking about here right now is probably going to be turned on its head by the middle of summer. And I guess I'm ready for that.
Okay, and this should really be helping the cause of the Fed.
Yeah. That's one
You know?
argument I kept saying to my growers is the Fed wants to break inflation, and one of the ways to do that is to lower commodity prices. And so here we sit.
Yeah, it's happened with oil. You know, everyone thought we'd be at $100 oil. That hasn't happened. Still looks vulnerable,
Hmm.
even with the war in the Mideast. And grains are lower. It's almost like we have commodity deflation
Right? Yeah.
with a parabolic move in equities.
Kind of
What does that?
amazing to watch. It's another
What
one of
time
those years.
period does that remind you of?
Oh gosh. I,
20, remember 1929?
I do not remember
Yeah,
1920.
me
Well, yeah,
either.
I
I'm
remember it
kidding.
well. It was a great
But I
time.
think we had deflation going into it, into the bubble at the top where everything was coming. I know afterwards, everything, went lower. So
Yeah.
we had a great deflation then. And, grains are a big part of, the whole consumer price index thing. Probably, they'll probably make it a bigger part to make the numbers look better. Um, Angie, this is
Decide.
your company. You want to tell everyone what you do, and if someone is just a retail trader, not just a retail trader and wants to follow grains, can your stuff help them?
Yeah, yeah, definitely. We put out commentary 3 times a day. My husband Carl and I. So Carl and I have both been in the business. I've been in it for over 19 years. He's been in it for over 30 this year. And both of us have, cash grain experience. And so we work with farmers quite closely, quite extensively, quite closely, and also some other independent agribusinesses. And so one of the things that we like to do for folks that may be on the outside of the market looking in is just help them understand all of the stuff that, may influence futures prices or, that could have an impact on market direction as we move ahead. And so yeah, you can check us out here on the website. And if you wanted to explore a more in-depth relationship than just the commentary side of things, we're definitely open to any of that. But commentary, farmer risk management and really just kind of trying to help make the grain markets make sense.
Do your clients still have a concern about the dollar? I remember you called me in to talk about it.
Yeah, yeah, we're still watching it closely. I mean, it's kind of one of those things like you talked about with the BRICS, like the
Yeah.
dollar and what happens to it as we move forward has a huge influence on futures prices. And then of course it also I think affects geopolitical relationships and all of these other things. And so yeah, it's hugely important. It's something we pay a lot of attention to.
Okay. Well, I think then was not the time to really worry about it. I think it was last year and we had this rally, but
Yeah.
we failed at 105 and we started closing under this 103.80. We're going to head towards par. So I think the bear market in the dollar is about to resume. So thought I'd let you know. Maybe that'll lift grain
I
prices.
was gonna say anyone trading grains right now, we're just looking for anything that could possibly be bullish. So I'll take that.
Okay. Well, I think Yellen wants to take it down. I think they cut deals. That's why I think China came to San Francisco. Xi came to San Francisco
Mhm.
because they're tired of having to intervene to hold the yuan steady. So let your people know it's not a bad time to be hedging dollar risks now.
Excellent. I will pass that on.
Okay. And
Yes.
great to exchange ideas with you, Angie. And, we talk every 3 months or so. So, it'll be near the summer.
Right?
And you're
Yeah.
right. Well, it's amazing how things can change in 30 days. Because we don't have large carryover stocks, do we?
We do. We have
We
relatively
do?
large, historically speaking, in corn and soybeans. But I think that's the thing in grains that can be fun is that can change very, very quickly. All you have to do is have one survey, come in under expectations from the USDA or something like that, and all bets are off. So
Yeah.
yeah, it should be a fun year. I'll use that term loosely.
Okay, Angie. It was great. Always enjoy catching up with you. So,
Oh, thanks for having me.
yeah. So you can follow Angie on X at Goddess of Grain and check out her uh, website, consistsag.net. If you want to start following the grains and if you want to find an out of favor market, you can't find a more out of favor market than grains right now.
It is
So,
true.
all right. Well, good hunting. No matter what the price of corn, wheat, and beans do, I'm always rooting for you to have a bumper crop, Angie.
Well, thank you so much, sir. Thanks for having me. I enjoy it as I enjoyed it as always.
All right. Angie Setzer, everybody.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.